Welcome to the Money and Investing Show. This space is all about managing money and kickstarting you into the world of investing and finance. A series of bite-sized episodes designed to simplify and equip you with the tools on how to get you started, along with some tips and tricks for those already investing. Stay tuned for today's episode with your host, Dale.
Hey everyone, and welcome back to the show. We're now into episode 5, and hopefully you're really starting to get a base for what investing is all about. And for those that have just joined us today, welcome, and you can always head back and listen to previous episodes to help build a base. On today's show, we are going to cover how to actually find the stockbroker of your choice to be able to make that first purchase. So let's say you already have an idea of what company you want to invest in. How do you actually go about doing it? You don't have to call the company itself. You don't, go around to their office and put in an offer. You do it through a stockbroker who is licensed to buy and sell shares on your behalf. So brokers buy and sell stocks through all different stock exchanges, similar to the ones we discussed in episode 2, where we talked all about different share markets. Now, for most people starting, there's a few options, but you will most likely be looking for an online broker. And what do I mean by that? That's where you can execute trades just simply by the click of a mouse. So there are options available for people to use what's called a full service broker, who can offer pretty much the full service. So things like recommendations, opinions, advice that you can follow. However, these brokers typically have sort of a minimum investment amount and will charge for their services. So think of these people like financial advisors or wealth managers. For most of us, let's just say we're happy to start out small and we're happy to go it alone. We probably just want an online broker. So what are some of the considerations you need to think about when deciding who to go with? Often the case with most brokers is they're free to sign up for, but what they charge for is the trades or the type of information they can provide, and that can vary widely. So when choosing a broker, you're not really locked in to stay with them, and you can switch really at any time. So you may find out that you have more than one account. So when you trade shares in Australia, your shares are all linked by what's called the CHESS system. So CHESS actually stands for the Clearinghouse Electronic Subregister System, and it's the computer system that's used by the ASX to manage the settlements of share transactions and to record your shareholdings. So to put it simply, the CHESS sponsored means that the ASX is keeping a list of who owns what shares. If your shares are CHESS sponsored, it means that when you buy and sell shares, the ASX has a record of you owning those shares directly. So it's just a way to make sure that those shares are in your name and you know that they're yours. Some brokers will operate under a custodian model, which means that they hold the shares on your behalf. So if the broker was to go out of business or something untoward would happen, your ownership of those shares would not be as clear as if they were CHESS sponsored. So most brokers within Australia operate under the CHESS model, so there's not a whole lot of risk there. And the ones that don't are pretty big, and the likelihood of them going out of business is pretty low. But there's a lot of brokers around the world that don't have this, so the CHESS model is really unique in Australia and a few other markets around the world, but Australia has this, and it's a really good way just to uniquely identify your holdings. So now that we know that, what are some of the things that you should consider when looking for a broker? So there's a few points you want to think about. So cost of brokerage is one of them. Some platforms offer free trading. I know I'm seeing ads for one that comes up all the time that offers free trading. I can't remember the name of it. I think it's eToro. And that can vary right through to sort of $8 or $9 a trade, $10 a trade, right up to $20 or $30 a trade. So when looking at different brokers, one thing to consider is the cost that they charge to buy and sell. The next one is the level of information that they provide. So some brokers will give you really basic graphs and charts and some limited information, whereas others will go right into depth around information they provide, analyst reports, buy and sell recommendations, and all sorts of those things. So really depending on how much information you'd like to get from your broker is another big consideration. Another one is convenience. So, is it linked to your bank account, for example, or do you need to transfer money across to it? The first brokerage I signed up with CommSec. So I'm a CBA customer. It was just super easy for me to start a CommSec account, and I can view it all in the one platform. And that for me was just really convenient. Another consideration is customer service. So where is the customer service? Can you call people by phone? Is it online only? How do I get in touch with people if I need to? And lastly is the access to different asset types and markets. So different brokers will give you different access to different places. So some will really focus on just Australia and it's quite expensive to buy elsewhere in the world. Others will focus on giving you access to other markets around the world. So really thinking about where you want to invest will help steer what kind of broker you are searching for. As I said a little bit before, a lot of people tend to just go with the bank they're currently with. It's just easier. I spoke about a second ago that I opened my first account with CommSec. I've tried a few out there and I still actually just prefer CommSec. The trades are a little bit more expensive, but for its ease of use and reporting functions, the convenience of keeping everything together and everything else I get, I actually just enjoy the user experience on CommSec opposed to some of the others that I've tried. All of the big four banks in Australia offer a brokerage account, so most people have an account with one of the big four, so it's really pretty easy to set up. They all are generally around the same cost per trade. Each will offer international trading, and generally the big banks are the ones that offer plenty of analysis and reporting. And again, as I mentioned, if you're someone that likes the convenience with linked bank accounts, that's probably the best option for you. Then you have options out there that offer brokerage or offer lower brokerage, but the reporting and analysis aren't as in-depth or as easy to use. So you might find a cheaper brokerage as long as you already know the type of stocks you want to buy or you've done your work elsewhere and found your information elsewhere. These are a great way to keep your brokerage costs down, especially if you're trading in and out of positions regularly. That brings me to my next point. So why should we be worried about brokerage? Really good question, but you want to try and keep your brokerage lower as this will obviously impact your investment gains. So if brokerage takes up a really large portion of your purchase, it's obviously going to eat into the profits that you're going to make. Say that I'm going to make a $1,000 purchase and my brokerage is $19.95 or $20. My brokerage is then almost 2% of my total trade. So instantly I need the company that I've picked or invested in to grow by over 2% before I actually see any gains. And that works on the flip side as well. So for me to sell it, I'm spending another 20%. So assume the price hasn't changed. That's then 4% of my total purchase price that goes to buying and selling. Myself personally, I'm not super worried too much about this as I'm generally investing for long-term horizons and this percentage doesn't really make a big impact to my overall goals. However, if you're investing smaller amounts or you're doing it regularly, this number will make a huge difference. So say you're someone that's only putting in $200 at a time and your brokerage is $10, that's just a huge chunk of your investment that's getting taken up on brokerage costs. So you want to worry about brokerage, especially if your brokerage is taking up a huge portion of what you're trying to spend. So a general rule of thumb is try and keep it to about 1% of your purchase price. a really great tool to work out what broker is right for you is comparison sites like a CanStar. So you can do some broker analysis, but there's just so many out there, and you can, when they're free, you can just get started and have a go and have a look around at the interface and see what you like based on going in and using it. So I've used IG before, but I found its interface a little bit cumbersome for me. Whereas one of my friends uses CMC Markets and loves its technical analysis. So there's just so many out there. Another one of my mates uses Self-Wealth and loves the fact that it's low brokerage costs. So everyone's got one that they really like and use and get used to. So a big one's really about just trying them out and having a go yourself. So as I touched on earlier, there's also a big difference into what markets each will operate in. For instance, to trade internationally with CommSec, it's super expensive. So I use Stake, which doesn't charge any fees to trade, but makes its money on the foreign exchange crossover. So it's really up to you, guys. There's so many out there. Just start to sort of play around and do your research so you can feel comfortable. But I suppose my advice to you is really don't get too bogged down on finding a broker, as it's really super easy to switch, and it is really just about getting started. Lastly, I'll touch on what's known as micro investing apps. So think of this like apps like Rocketship or Raise or CommSec Pocket, and these apps all allow you to make small purchases or even loose change to invest into ETFs. And these are great platforms for those starting out. I think the minimum purchase on most brokers is like $500, whereas to start with some of these apps, you can literally just invest your spare change. So some of these apps integrate with your bank accounts, and say you buy a coffee and the coffee's $4.50, it might take round it up to $5 and take that 50 cents out and add it to your investment account that follows an ETF. Really good way to sort of build up some savings and to get into investing, especially if you don't have a lot of money to start with up front. Like everything though, the micro investing apps, they all come with their own fees, and you can look into those. But as I said, it's just a great way to get starting without needing a lot of upfront money. As you sort of build up, you might decide that, this is really good, and you can then start to look into some higher up brokerage or online brokers. So I suppose some key takeaways from this episode are that you need a broker to be able to buy and sell shares. You just can't do it on your own. There are plenty of brokers around, and you just need to determine which one best suits your needs. I'd encourage you following this episode to do some of your own research and just open up an account somewhere just to get a feel for what they are like. I know myself, I've got, I think now 3 or 4 different brokerage accounts, and 2 of them I'm not sure I ever actually traded on. I sort of opened it and realized I didn't like it. So yeah, as I said at the start, there's no lock-in contracts. There's no money that you need to pay to open these accounts. It really starts when you start making trades. So feel free to open an account and just have a look at what you like. But again, as I mentioned, don't get too bogged down in it all, because it's really just about getting started, and you can play around with these in future dates. And if you're investing for the long term, as I mentioned, that upfront brokerage isn't as big of a downfall as it first sounds. So with all that being said, next week we're going to cover off how to pick a stock and make that first trade. So really exciting. Hopefully you guys have taken something away from today. And as always, if you like what you heard today, guys, please hit that subscribe button or leave me a review. I'd love to hear what you think. I'll leave you today with a quote from William Feather, who once said, "One of the funny things about the stock market is that every time one person buys, another sells, and both think they are astute." I really like this quote, as it goes to show that with investing, 2 people can make really opposing decisions, and both can still make a winning decision at the same time, or potentially a losing decision. The key to investing is ignoring what others are doing and stick to your own thesis and know why you got into that stock in the first place. Thanks, guys, and have a good week.
Please remember, the information and opinions provided in this podcast is general advice only and does not constitute financial advice. This podcast was created without knowing individuals' needs, financial situations, or investment objectives. The host of this show may hold positions in the companies discussed. Please remember, before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.